for you guys. And then I'm going to switch to my professional side. Okay. Now, welcome to the call, everybody. I'm really excited to do this training for us. Of course, this is one of my favorite things to do. Just getting on here and educating every single person. Just showing you guys, the way, the truth, and the light in trading and how you can make, full-time living in trading. That's what matters. So I'm actually going to be posting probably a $50,000+ withdrawal in the next couple of days. So that's going to be pretty cool. You guys will get to see that. And I was actually just talking to Devin today to try to figure out, how am I going to move this money, right? How am I going to move this money? Because, we're trying to stay under the radar when we're moving money like this. You know what I'm saying? Especially that kind of money. It's been a really good last 2 weeks. Chef JPY, if you guys didn't see my story, was a really good trade. That was a 20-some% ROI trade. I'm not going to go to it because it's going to mess up this USD huff. So I don't want it to mess up the huff. So yeah. Anyway, we're going to get the back test again. Everybody on the call knows what we are doing right now. So I don't need to go back and do all this because everyone on the call already knows what we're doing. All you guys already know. So here's the thing. We know that we are doing the step 1 through 4 in the backtesting strategy. We know what we're looking for each and every time. So the biggest thing that we do in this moment is we just simply let the market, or we simply go to step 2. So step 1 is define your trading strategy. We know what we're looking for. We're an M-top trader, we're a double bottom trader, a W pattern, whatever you want to call it, W, we're that kind of trader. Support, or not support, resistance, trend trader, and trend break and retest. And then we also look for the order block zones. So when we kind of mesh all that in to where we're at today, what we're going to be finding is there's going to be massive moves that happen in the market. And we're going to catch easily 200 pip moves. That Chef JPY trade yesterday that I had posted on my story, that was a 200+ pip move. I took a little bit of profit at that support that it was at, that whenever I posted it, where it was just tanking at. And then I pulled out the rest today. That was a really nice trade. That Euro JPY trade that I happened to get stopped out on, that trade, I think where it's at right now would have been like a 50-to-1 trade. Like if I held on my positions, I'm not going to hold on my positions though. To 50-to-1, I'm trying to build the account a little more aggressively right now, so that's not going to happen. But in doing this, you guys know we're going to be catching some big trades. That's what's going to happen. But we have to practice and we have to get this down first. And we have to make sure that we understand what we're doing. We need to understand where the liquidity is at. We need to understand where the money is. Because when you guys get to trading in these live markets, not with real accounts that are B-booked accounts that actually have nothing to do with the market, but I'm talking about whenever you actually get into real accounts that have real money in there backed by real LQ providers, you're going to have to understand what to do in the correct times whenever things come up, because there's a certain amount of money that's going to have to be in the market. And that's why I've kind of shifted to those bigger time frames, because what happens within those bigger time frames is there's a sufficient amount of liquidity that's been built up in those moments. So when these things happen, what we can do is when we have those 6+ figure accounts, our orders are going to get filled. Our orders are going to be in with the real market. And then when we want to exit our positions, there's going to be enough orders backed on our side of things that we can actually close our trade. So in doing this, what I'm wanting everyone to get down is it's not just about randomly getting in and being like, I'm a sniper in the market, bro. I snipe the market all the time. Call me Sniper FX Sniper. No, it's not about that. It's about understanding that when you really get into the real money, and I've had certain things happen to me in my trading career with growing these accounts that are B booked and not getting money and being like, yo, this is like on a MT4, like in the past, but it's when you actually grow like a six-figure amount of money. And then you've been B-booked your whole career. So, and you go from like less than $10,000. So these kind of things that go on, what I'm wanting everyone to understand is you need to trade where the real money is actually at. You need to find where the real money is. So when we're doing all this, when I say I'm cool, I'd rather miss the move than get in too early, because then my trade becomes a part of that. um I want to say that potential move, right? Or sitting in and collecting the orders and then just immediately going, against me. I don't feel like on Euro JPY, the trade I did last week, I got in too early. That was just honestly just a huge stop hunt that happened, because the way that that happened last week and the way that it did it, it flew up and then it just flew down and it tanked. And there was a lot of money sitting there, but it needed that money to go down, which it is what it is at the end of the day. But then I caught a really beautiful trade on Chef JPY this week. Didn't get stop hunted out. Thing got close to my stops, but then it just tanked down, and then that still ended up being over a 20-to-1 trade. So in doing this, what everyone needs to understand is the market's not out to get you, but you have to make sure that you just really let the market actually show you where its reversal zones are. That's one of the biggest things. So looking at this right now, now you can see on USD that we have a break and retest zone right here. We have a nice little trend sitting right here. We have an M top that formed right here. That pretty much looks like it's done. Yeah. Yeah, that pretty much looks like it's done from there, but this is just a really qualified M top. Have a really nice liquidity zone, just sitting right here in money. Nice little liquidity zone sitting right here in money. This is not um, a double bottom for anyone who is like, is this a double bottom? Remember, I'm gonna just draw this because this is a really good time to draw this. Like a W, like the way those go is they come out like that. Now, when you look at this right here, this is like perfect. Like, whoa, well, what do you mean? It's because when we talk about like a W, like a double bottom, like this is what we're looking at right here. Is we're looking at something like this. So this comes up, that's like an M top. So you can imagine, this is an M here, here, right? And it just happens to come down in a zone of liquidity. Okay, so I don't want you guys to get that confused and think like that this is technically double. This is that's just a zone of liquidity. That's an area in which price built up really nicely, money in there, and then it just decided to go up. That's really all it is. This is an M top right here. It just, remember, when you see this stuff, it doesn't mean that it has to go in your direction. It doesn't mean that it has to fly in your direction. That Euro Chef trade this week, that ended up flying straight through support. If anybody did a buy on Euro Chef, it came down to break and retest for a really good like 10-to-1 trade or something like that. But when you looked at Euro Chef this week off the daily, it flew all the way down into liquidity and flew right through. That was a trade I took. So you guys are going to lose trades. These things are going to happen, but just make sure that you guys understand that you will catch really big moves that are going in your favor, that are going to fly in your favor. And so you think Chef JPY, for instance, yesterday, just because I'm posting some things on my stories, that was that 20-to-1 trade that we normally get within a month time span whenever we're doing these back testing things. So you're going to get a trade like that once a month. twice a month, maybe 3 times a month, just depending on the pair and depending on, how many different ones you trade, between 5 to 10, you're most likely going to get probably 2 to 3 of those trades, maybe 4 a month. And you're going to have a bunch of little losses. That's what's going to happen. You may not have a crazy amount of losses, but whenever you find those bigger moves, because I don't take my smallest position 3 to 1 out, I don't take it out. I usually let it ride to at least whenever I'm up 3 to 1 on my big position, because that's usually like 2 to 3 times the amount of what I normally risk. But these things are going to happen, and you guys are going to have really big wins, but you're going to have to do it in the proper zones. You're going to have to do it in the proper zones, because if you're just getting in randomly, it's not going to help you. You're not going to be able to make the kind of money that you, because what's going to happen is the market is going to, let's just say, for instance, you know, let's say, for instance, let's say you got a sell right here, right? And like this is your sell. And then just look at this real quick. If this was like a too early entry, right? Say this was like a too early of an entry. The market will spike up at your entry and it will close your order and it will have gotten that liquidity right there and it will come right back down. And you'll be like, oh, maybe now's the time. Maybe now's the time. Maybe I just put it, no, and it can spike right back up and come right back down in liquidity. You need to give the market a sufficient amount of time to build up so that you can see where those liquidity spikes are at and where the liquidity is low at, because that's what those wicks represent, is weakness in liquidity. So when they go up in those zones, all it's doing is telling you, okay, this is where the buyer's liquidity dries up. Here's where the sellers get strong. Then you go in and you put your trade there, and then you put your stop loss above that. It's not like right above it, but you're putting it like a good distance above that zone. Depending on the pair, you're putting it between 15 to 20 to 25 pips above that high. But then you're talking about the kind of stops you're looking at might be 50, 40, 30, 25, 20, 15, something like that. So when you guys are doing this, how I've been doing this back testing, we've done it 4 weeks straight now. And we're going to do something a little different today, okay? But it's going to be really good. So we're going to go over, and what I am going to look at real quickly is, now that we got everybody on, is anybody going to be sneaking their ass off here at any point in time? Okay? If so, you better get off now. There ain't no reason to be on. Let's see. We're going to go with boom. Okay. We're going to go with boom. Okay. We're going to go with, let's see who else. Oh, we got 3 of them. We're going to go with, okay. And we're going to go with, okay. And we are going to go with, who do I want it to be? Okay. Thanks for letting me know, Rebecca. Yeah, we'll do that. There's only one there. All right, got it all. Now, with that being said, now I got all that done. I got that written down. We are going to get it popping. So, of course, we know the easy part. I'm going to go ahead and get the charts marked up the right way that we need to get them marked up. And then we are going to get it popping. So there is the zone of liquidity through there. We got M top zone sitting here, so it looks like a pretty strong zone is sitting right in there. This is a huge trend here. Yeah, if I'm going through there and tapping those two, boom, 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 boom. And then this is another trend through here. Okay, that makes sense. That's why it's rejecting off of that, boom, boom, boom. So those are zones there. Yep, nothing over there. Pop this over to the weekly. We're going to find all these zones in the weekly. Okay, so that's done. We don't have to worry about that unless it does come up. This is looking like the next immediate trend through there. Okay. And yeah, this is a better one through here. Pretty much get that right through there. This is liquidity. Okay. And this is daily zone. See, that's a double bottom right there, guys. This is a double bottom. See how it does it like perfectly on. See how all these patterns I just drew when we go to the daily, do you see how these patterns appear on these massive zones of liquidity that I've lined out? Like you see this right here? You see how this thing spiked all the way through? I didn't draw this. Because I was literally like, this has already happened. But right through here, there's your zone right there. This is not a double bottom either. This is more of an M than anything. This is just a really nice zone of money. That's all that is. That's all that is right there. So don't get confused because all this is just liquidity in here. That's all this is. So when you see this, don't get confused with that. This is a trend through here. This would be your trend off the day. This is the immediate trend like that. See that right there? And what so happens to happen at the break of that trend? You see the M top? There it goes right there. That's the one I really like, the kind of M's I really like. Because as you see, it breaks the trend. Now, with that being said, ladies and gentlemen, so what do you want to pick? Do you want to pick A, M, T, Z, or S? What do we want? A, M, T, Z, or S? Somebody throw a letter out there. Give me A, T, Z, M, or S. A? Cool. All right, Angelica, what's up? You're up. What you got for me? You're up on this. So we're going to do a whole different thing than we normally have done because I need to make sure y'all been paying attention. Okay? I need to make sure you guys, this is the benefits of me having less people in the elite zone because I can really key in on you guys the way that it's seen so we can have more one-on-one work and you guys can actually see what other people are thinking and you can actually look at the market and see like, oh, okay, so this is coming up. So we got Angelica. Are you ready? Can you unmute yourself? What is the next steps to USD Huff? So what are we doing now? So when you look at this, what are you looking at? Whenever you see this, so now we're on the 4-hour, right? So I'm gonna shift it to the daily. Okay. So this is done. All right. So we always start, we already got our strategy, we got it all marked up. So I've kind of cheated for you guys already. Not really, but I've marked up the chart in the proper way that it's needed with all the correct zones. Okay. So everybody has the right zones. Now, what it's up to you guys to do is to actually come in, and we're not going to do this every single time. Okay. Just so you guys know, this will not be done every time. But I want to see that you guys are actually putting in the time whenever you guys are gone. So that's why I said if y'all want to get off, you might as well get off now. So with this, this is going to be the session I decided to pick. So I'm going to be picking these are going to be random. It's not going to be all the time because I'm going to teach but I'm also going to work hand in hand with you while we're on this time. So that's where we're going to make sure that we do. But you said, I can't unmute, I still have renovators over and it's loud here. But I personally would look at a break and retest. Okay. Damn. Of course you can't unmute yourself because that's gonna make it go so much slower. Okay. So well, we gotta pick the next A. So Andrew, Are you able to unmute? Or are you an area where you can't speak? I need to know. I need to see if you've been paying attention. I need people who can, or I'm just gonna go down the list. All right, Andrew, are you dead? Are you around this thing? What I would do is, okay. So, Angelica, you said break and retest. Okay. Let's go to the next person. Mike, what's up, bro? Mike, so ill. Are
Hey,
you
what's up?
unmuted?
Yeah, I'm here.
Okay, that's what I like to hear. That's what I like to hear. Okay, so Andrew said he was going to wait for 3 days for the break and retest of the trend. It's three
Mm-hmm.
noon, so I'd be extra cautious. Okay. So in this instance, we're going to shift it down to the daily, right? What
Uh-huh.
is it that you were looking at to do in this instance?
Uh, a break and retest is gonna come back and hit that line, but I'd wait a couple of days and see what it does because it's at that high right there.
Right,
So I'd wait and see what it does because I need a place to put my stop loss at
right. So what you'd be looking at is you got you how many days are you gonna look to wait on this?
at least a day or two.
So just one day.
Yeah,
Not two, not three, not four.
I mean you could wait 2 or 3 just to get your your stop loss right. So I
Okay.
mean it could keep on going up and then you'll lose the trade. Um,
Mm-hmm. So in this specific instance, right? So
break and
now
retest.
we
That's
have
what I'd wait on though.
so you're waiting on it for this gold zone, or you're wanting it to come to this line right here.
That line there.
Okay. And
Use the trend
then
line.
whenever it reaches, so okay, let's play it. Let's play it. So we're gonna pop it off on the day. So we're just gonna let it run off the day. So we've got 3 successful days. So now what you're saying is, in this moment, right here,
Yep.
this is what you're looking at for a trade.
Uh huh.
Okay. So let's look at this. So you're going here, and we're gonna go the 50. What rule are you gonna use in this instance? I don't
What do
even
you
know how
mean?
much. I don't even know how much. See, I'm over here listening to Young Pickles, and I don't even know how big of a stop loss this is.
I
One,
would base it off like how you do it gold, so I would say that's like 120.
like 120 pips.
Yeah.
It's a huge ass stop loss.
Okay, so that's a big stop loss. Okay, I didn't know. It says 1.2. So like that it literally says so that's like 2,900 even, and this is like 2,700 even. So I didn't know if that was like $2 because I was like, that's not anything. That's a little bitty baby stop loss, but okay,
Nah, it does have a lot of like liquid. Not as much as gold, but this one does kind of move if you look at it.
got you. That makes sense. I'm just trying to make sure. Okay, so now in this instance, stay with me here, Mike. What are you looking at? So this is the zone that you wanted to come back to. Okay, this is the
Yeah.
zone you wanted to come back to for it. Does this zone play any effect for you on that trade?
Uh, does that like trend line that you just put on there?
Mm-hmm.
Yeah, it's underneath it, so it's
So is this retail or is this big money?
that's a retail trade.
Okay, so this wouldn't play any effect if you taking a buy right here.
No.
Nice, cool. Okay, so now back into this, what we're going to be looking at is we're looking at this right here. So are you setting your trades in right now from this zone to here or what?
Yeah.
Okay. So if you're setting your zones in, so you're going to go this whole zone right here. All right, so we're going to shift it down to the hourly. So what you're doing is you're telling me you're going right here as one trade, and then where's your stop going?
Underneath, I kind of hard to say. It's like underneath the, right where the top line's going,
This
right
one?
underneath there. No,
Underneath,
yeah, that
underneath
one.
this
Yep.
one?
Yeah.
Okay. So how far are you taking it down? Like right
However long,
towards this 50?
however long it needs to go.
So below this line right here?
Yeah.
Okay. And so this is your 50 pip stop. So then you're gonna scale it?
Mm-hmm.
Okay. Talk to me. I'm gonna scale it. So let's see. We'll go 30. How do you want to scale it actually? So we go 50, what's your next size stop loss?
I'd go in the. Let's see. I have to match it up with the other stop loss, but I'd.
Right. So do you want to go 50, 40, 30, 50,
Yeah,
45, 40? What are you trying to do?
I work 50, 40, 30.
Okay. So you got two positions in right now then. Okay. And all right. We got 30. So we're going about right here. Okay. So you got two positions in, and this is your zone. So this is how you're taking this. Okay.
Yep.
You're 100% good with this?
Yeah.
Perfect. All right, here we go. We're going to run it. All right, y'all. We're going to run it, and we're going to see what goes off on this zone. Pause this. Let's bring this down. We got one position in, okay? One position in. Now, what I'm going to do is you guys are going to like how I do this next part, okay? I'm going to make sure everybody's included. Okay, so we got two positions in for Mike on this zone, okay? There is your zone there, and that is stop loss hit through there, okay? So, next thing, what I want to ask is, let's go with Sebastian. Sebastian, when you look at this setup and you look at what just happened, what is it that you look at and what stuck out to you within this trade right here? Are you able to unmute?
Yeah. So if I look to the left, around 298, about 200, there's some structure. Yeah, right around there.
Right.
So I would have waited for price to kind of let it ride out a little bit in that line and give me some sort of like rejections along that same zone, maybe a little lower where the entries got in. And giving me some sort of sign that it wants to push up.
Okay.
But I mean, or drawn from the top, a trend all the way at the bottom, waited for that break, and the trend switch.
Okay. So, do you feel like when you look at this from this, do you feel like this was an early entry?
I feel like it after it does seem like it was somewhat of a early entry, but I can't lie and say I wouldn't have saw that and wouldn't have taken it.
That's fine. I mean, the whole point of this is for all y'all to be honest. And I'm not calling anybody out. I just know that this is going to be a really good way that after we've done a little bit of work together, that we do this live and in person because this is you get to kind of see a little bit of what I do in my one-on-one trainings and how I do this. But this actually is going to help each and every one of you guys get better. And this is my goal. So when you look at this, Thomas, what is it that you feel whenever you look at this and you see this setup? What do you feel? You know, this is the bank zone. This is where the real money is sitting right here. So when you see this, are you saying that this is where you're going to enter, or what are you going to say? Because obviously you know what happens, but we're still not done with this yet. So we still got more time in this.
Okay, well, for me, since I've been looking at this, can you go back to the daily real quick?
I'm going to have to reverse it back to this specific zone so that we don't mess this up. But yes, there you go.
Okay, boom. So it's already in that gold box, and I see that it pushed.
This one, right? The
above
diagonal.
that. Yeah, that one and those two zones, the rectangle and the dual trend line.
Right.
So I would have waited, knowing from my mistakes, I know from the first thought before learning what I know, I probably would have got it right there and lost that tree.
Right.
But I would have waited because it broke and did a retest. But I would have waited till like at least pushed above that high, and then came back down and did another touch onto that
What
dual
high?
trend.
You would have waited
Uh,
until it went
yeah,
above this high
yeah.
to take a buy?
No, no, no. Like I would wait for it to go above that high and then reject back to that dual trend line, and then I would start to look for entries.
Right. Now,
Yeah.
what I'm asking is we did all that, which is good. That was a great explanation. I mean, when you look at the whole thing for what it is, all it did was basically what I was telling you guys before. It spiked. You guys see it just went spiked right above that high right over here. There it is right there, spiked up and came right down. Especially right before, it's an easy sign. Right before it made that big move down, it went and grabbed it right here. This is where it grabbed that liquidity right there. It grabbed the money right there and then it shot down. It had the amount of money to do it. So that's normal. But where we're talking now is our trading strategy and doing this correctly trading wise. So, great explanation. Mike, that was great analysis on where you did that. Sebastian, that was great in explaining it. But what I want to know from you guys is, and I'm specifically asking Thomas, because when we play this, so when he got in here, where, Thomas, would you look to enter at? Because all the zones are marked up correctly. So I have everything marked up the correct way. That's why I said it's kind of cheating, because I already have everything marked up, but it'll take way too long for me to sit here and have you guys do this. So I'm going to at least speed up this process so we can run through everyone that I want to run through on this webinar. So here it is here. So whenever he got in, do you feel like this was a zone in which what you know, and all of you guys know the same amount of stuff because you've all been on in the last 4 weeks? But not everyone is on the same level because y'all aren't practicing the same. So what's going to happen is you're going to see where the people are with you, and this is just you, and this isn't a competition, this doesn't matter. But what I want to do is I want to see who's really putting in the work and who's really putting in the time, because I'm 1,000% serious about what I'm doing. And I want to help produce 6-figure and 7-figure traders. And that's why everything got raised. That's why all the price requirements, all the different things happened, because I'm trying to see you guys be successful in this. And I know it's going to take me pushing you, but you actually showing up for yourself. So not everyone has been putting in the same amount of work. So now, Thomas, I want to know, when you look at this, you say what? You would have entered in the same area, or what would you have done? Because this trade's not done. It's not done. So we're going to get to see what happens. So now you know it hit stop loss. So I'm going to just go ahead and play it and let it go through and hit stop loss, because we all know that's what happens. But now, with it going in this place, okay? And these are all of you guys who've taken really good notes and have paid really good attention to what's going on and actually practiced. This is where y'all's notes are going to come in, because guess what? Y'all can go and revert back to your notes and see exactly what I said verbatim, and you can be like, oh yeah, this is what he's talking, and just read right off the note, and it's going to say blah 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 blah. That's what it's going to say. And you're going to see it and then watch, and then you're going to see, because you have to think, me going and back testing and doing this, guys, I'm not even cheating on getting these trades. And you see, we lost what, 3-4 trades in a row on GJ, and then we won like what 3-4 trades in a row for like 40% ROI, and we haven't had a single time where we haven't made over 20% in doing this. But this is exactly how you get better, and you got to practice this though. You got to actually go and do it. So you got to find that time in your busy schedule, and you got to be like, okay, instead of me getting on and doing this bullshit, let me make sure that I go and I put time and attention to trading. That I really go and back test, because this is what's going to set you apart. This is what's going to help you make money for real. Okay? So now, Thomas, where we're at in this, what would you do? Because this is a valid zone. This is a valid zone that's telling you this is where liquidity is. So he got in here. Now, what are you looking at?
So, like Sebastian said, if you look to the left,
Okay.
it did have a.
So we're gonna go look at the retail
As
zone. Let me just point that out, but okay, there we go.
But I also, just like what I said from the daily, I still would have waited for like another. So since it got to that point, I probably would have took a trade right at that point, put
Okay.
my stop loss.
Okay.
Because when you measured it out, that's how I also what I would have based it off. I would have seen how big that zone was, which it was 120 pips. So that I would want to wait for it to go down in order to get that quote unquote perfect trade, which is there right now.
Mm-hmm.
So I would place a trade right on that line.
So you would. So let me ask you this: would all of your positions be in this moment, or would it just be?
No, it would most likely be like one trade, unless it like went out my way and came back, and then I would place another trade.
So you're just placing one trade in this area.
Yeah.
Okay. So size of stop loss. Same stop loss size.
Could be. I would do. I would go with 40.
Okay. So you're going 40 right here. Now,
Yeah.
what I'm gonna do for everybody that's on the webinar is all y'all gotta write this down right here. You wait for the first rejection for the market to tell you where the stop losses are set. You wait for the market to tell you where its stops are at. You wait on the market to tell you where its stops are at. So, when you do this, what's going to happen is the market is going to tell you the place if it comes down to this zone right here. You think we're trading off of a daily and above, but we're using the hour to find our stop losses so that we can actually grow our account pretty nicely. That's what we're looking for, okay? So in this, right, so Mike, what you did is you came in, but you let no buildup happen, right? Sebastian, you looked over and said, I'm going to look at this zone. Thomas, you the same thing. You're going to look left. Structured leaf clues. I understand it. But see, there's a piece. You have to piece all this together. So there's a lot of like pieces out there to the puzzle that all sound really good when you see them on social media and when people say it. But to put it together in the way that actually is going to lead to you making money and putting it into your bank account, or probably not your bank account, but something else, but in actually living life and living off of your profits, you got to piece this stuff together correctly. So this is a retail zone. This really doesn't matter at all. It does not matter. This zone has everything to do with this zone right here. It doesn't have anything to do with this over here. This is new money. So I don't even, okay, yeah, this is August 28th. This is August 4th. We don't really know. One, this is a retail zone anyway, but we don't really know if the market's going to honor that zone. So what we got to do is we got to let the market actually come into this liquidity and tell us, is there a rejection? Okay. So watch what we do now when this happens. So this is what we're going to do. And then I'm going to move on to the next set of people to answer the next question. I need to see the market reject this zone right here. I much rather I would be totally fine with missing a trade than getting in too early, the market taking my money and then going against and going in the way that I want it to, right? So we need to give it a sufficient amount of time to build up, okay? So this is what's going to make you guys better. Me putting you guys out here and you guys going over the charts yourself and actually telling me things, it's going to stick way better. And you're going to write that down. You're going to be like, this is the fucking time he was talking about. So when this comes here, I'm not getting in on the trade. I'm waiting. And that's exactly what's going to happen. So here's your zone, right? We're back into liquidity zone. We're back in that zone, right? Came down there. And you guys got the terminology. Everyone who asked a question or answered a question, you guys got the terminology. You get it. But now it's about, okay, how much have you practiced and how much have you actually seen this happen? Because what's going to happen is when it's all a flow, then you're just going to be like, oh yeah, boom. Whenever it comes to this zone, I'm not going to immediately get in right now, because what I want to see is, I don't want to be the first person in the market. I want to actually wait and see if this money, when it comes back in this zone, honors this zone right here. Because yes, it is a break and retest, but what I don't know is how deep this can actually go, because it could come back and break and retest this, and yeah, that looks all really good, for a break and retest, and this seems like a really good zone of liquidity. But I need to actually see some buildup happen right there. And then once I see, and Mike, you said it correctly, letting, I kind of pushed you towards the answer, but first we were talking about 1 daily candle, then we went to 2, then we went to 2 to 3, which is good. We got to that 3 point, because we don't want to have a false breakout. Okay. Now, if this thing goes up and went and snagged this liquidity, then it's going to whip through this zone hard. It's going to whip through it. It's going to fly right through it. It might play around with a little bit, and it's going to fly right through it, because it could be new sellers that step in. Okay. But we got to see if this is going to actually hold here. It's going to hold right here, and it's going to give us a beautiful stop loss. Okay. So now what's going to happen is we're going to watch this. Okay. Like I said, this is what's going to make you guys better. Doing what we're doing right now, this is what's going to make you guys better. Pointing these things out to you guys, getting these little things that we're talking about, this is what's going to make everyone better. So now we're down to the hourly, right? So we're going to let this thing do its thing. We already know what we're looking for. Those stop losses are fine. And again, I don't want you guys being retail traders. You're never going to grow an account by being a retail trader. It just won't happen. When you get real money, the market is going to take your real money, and it's going to be using it to go in whatever favor it wants. Okay. You guys see that move that it did right there? That did it right at that low right there. So what I'm trying to see is, okay, we got that push off right there, right? So now we got that nice little push off there. We got the retail trend. Remember this. We are talking about a retail trend marrying with the big zones of liquidity, the real money. Okay, so see that nice little insertion of money right there. So now what we got, watch this. Now what we got is, now we know, okay, this is the back of our zone. We can all go and look that. We go say, okay, that's the back of our zone right there, that spike all the way down into that zone right there. When we see this, and we missed some trades. This stuff happened. This is that zone right there. See those spikes that it does? See those spikes that it does? Now, I don't really know how this pair moves. Let's just go ahead and put that out there, because I've never in my life looked at this. But it seems like it spikes pretty hard in the liquidity zones. Yeah, and it holds pretty nicely. These are all the liquidity. Like, do you see how easy this is to see the zones now? Like, see that? Like, easy. It gets easy. We're not trying to be the first ones. We do not want to be the first ones in the market. That just absolutely makes zero sense. It does spike pretty hard in those liquidity zones. Wicks a lot. I'm just looking at all these zones. Spike, 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 spike. So it has multiple spikes in those zones of liquidity, multiple spikes in it. So what we're looking at is, we want this thing to come back and spike. We're definitely not going to be the first person in right now. So from just looking at this real quick, I would legit not be surprised if the thing spikes all the way back in the zone of liquidity. But what we're doing is, we're not going to get a massive stop loss. So what we really want is, we want this thing coming down into these zones. Now, to me, these stops looks way too small. And again, like I said, I've never back tested on this before in my life. So I don't know if this is like it's like it's not even a dollar difference. So that just seems really small to me. So like I said, I mean, this is not even, that's not even a dollar difference. So I can't fathom this thing. I mean, it looks like it follows price action pretty, actually, you know what? Let me stop being incompetent and just go see something real quick. Act like I can't go back and look at these charts. Okay. So that's supposed to be 1200. Okay, so 50. What's 50 looking like? 50 is going to look like this off of that zone. 50 looks like that off of that zone. Okay. Let's go look at it off of these zones. So this thing's pretty heavy in this zone. What I'm doing is this is a part of backtesting. You got to see what really actually works in these markets. So that's 90. That one's 160. This is here. And then you have to look at the equivalence of the types of drops and moves that you get off of those zones. So even if you do that size, see, that's an actually $2 stop loss. That's $2, which it doesn't even look that massive. I mean, it does, but it doesn't. But then you look, that's the kind of stop loss you're talking about there. That's the biggest stop loss that you're doing. Okay. That's the biggest stop loss. So then you scale this and you're going here. Okay. You scale this down like that. Okay. That was 5 to 1. I'm just looking at how these look. And then you go and you scale it again like this, the back of that zone, that would actually hit 2. So probably, let's see. So $2, 113, and let's see. So 1.38. So that exact trade, how long of a distance? May 19th, 23. So June. Okay. So when you go and you look at these things and you're not familiarized with these pairs, you have to go and you got to look and see what it does on those areas and those zones. So it's very important that you understand the market that you're trading in. That's one of the steps in, well, actually for everyone who didn't go to the retreat, but that's one of the things. Well, actually it's the first webinar I did of this year. Know your market. You got to know your market. So these 50 ones, these little 5-cent ones are looking, and then I don't even know how much money is in these pairs. So I'm going to go safe, and this is probably not even that safe, but I would probably go $1 at least on this to do $1. But just looking at this, and again, this is not a currency pair that I really know, but doing this is how I would probably look at it. I would go probably like $1, like at least $1 on my move, because that's something. These things look tiny. And then if I go and I scale this in, I'm just like looking like I can't even, like, look at this. This is like right here, maybe. And then to go like here, is that 5? And then to go all the way back here, this is like minuscule. I'm gonna go 15. I know, I'm gonna go. So here's what I'm gonna do. I'm gonna go 1.5, 1. Okay. 1.5, 1. Like that. So I can shift this up higher then, because I definitely don't need to go that low. And 5. So on this specific zone, this is what I'm going to do. All right. So again, remember, can someone repeat what I said to write down on what we're doing?
You wait for the first rejection you wait for the first rejection for the market to tell you where the stops are at.
Right. You let it tell you that there is money, that there's something there. It needs to actually confirm before you even get into the trade, guys. It needs to tell you that there's actually buyers in the market or sellers in the market. It needs to tell you that. And then when it tells you that, you then know, okay, now this is where I set my stop. Okay? Because you look at some of the trades or some of the things that I posted just this week, right? If you notice, my stop is visible. You can see my stop loss visible, and you can see the market get very close, but I've waited enough time for the market to actually give me some kind of buildup. I've waited enough time. Okay, so this is pretty much what we're looking at on this specific setup. So looking at this, it's looking like this is pretty much going to be a setup. I'm looking at this and thinking this might work, but I'm not 100% sure. It really seems such a small. The dollars, it just seems small, but it does follow price action pretty well. So now we want to see, does it spike back in that zone? So this is just a guess. I don't know. From what I just briefly looked at, it seems like it does a lot of spikes back into liquidity. So there's that rejection that we're looking for. Now we're going to see. We're getting the price to come back in that zone. It's sitting in that level. And now we get to see price is pushing to the upside. We need to go and adjust our orders like this over to here. So this is what we're looking at. Like this. Just my zones are a little off. How big was this zone? It just seems that seems big. And looking at this in this area here. So I'm gonna pause this. What day are we on? So this is a new day. Okay. So I'm gonna reverse this back. All right, because I don't want it to give it away. All right. Here's what we're looking at through here. Okay. So see this here, guys? Look. Here's our zone through here. There's our zone. So you can see the market pushes up. You can see the market coming down over to there like that. You can see this actual rejection. So getting in here, there's going to be absolutely no difference to when you have room. This is a retail zone. This is not truly figuring out exactly where the trade is actually at and where the real money is actually at. Seeing this thing come spike all the way down, this is whenever you actually know. Now the thing is though about trading also, guys, we don't have the ability to move the market. So the market just moves, and it moves based on the people who have the billions and billions of dollars. That's how it moves. So in this specific instance, what is better? A negative 3% loss or 0% gain? It's pretty easy. 0% gain. Because you didn't lose 3%, right? But if you see the trade go way in your direction, you're like, oh yeah, that was a zone of liquidity right there. That's really what I needed to wait on, was like the market coming to that zone. And that's what I want you guys to really begin to understand of what I'm teaching you, is just to know, like, okay, I need to be more patient and let the market come to the area. So if that price came down and it hit this zone, and this is the zone that it comes down and hits, that's okay. But this is what we're looking at right here. This is the zone. This is the zone in which of what we're looking at. And I feel like this is like weird to do. This is like so far back on that. But let's see what actually happens. And then we're gonna go on. We're gonna go on to another one with it. So let's see if this thing comes down and maybe possibly hits that zone, goes and hits that area. Okay, coming down in that area of liquidity. you know, we're starting to see some levels. The deeper that thing goes, the more money it's going to pick up. And like I said, we're going to see this thing fly down if it's in that kind of mode. Looks like this zone right here is building up too. And again, it's an agreement that you make with yourself. Am I cool with taking it off of this level right here? That's what you gotta say. So now this thing is set from September 4th all the way to September 9th. That's what we're looking at. September 4th all the way to September 9th. So what we're looking at is this is the end of the day here. Okay. So this is the end of the day. Now let's go look. Here's the 4-hour candle. Here's the daily candle. Okay. Here's our candle right there. You guys see the zone? So this is where we have to go back and forth. This zone in here, this is the money zone. This is the money zone. That thing spiked right through. Right here. Okay. That's the money zone. You can see that it doesn't come quite all the way down there off of the daily. But that guy right here, this is where the liquidity is sitting, right in here. Liquidity is sitting all the way in this area right here. This is seeming like where the money is actually at. So when we see this, right, when we look at this zone right here, especially the spike and this rejection right here, this is where the money is sitting right here. Came all the way down. You make if you want, I don't condone this. Wouldn't suggest it. But like Tommy was saying, he would have gotten in down here. Me, I'm not looking to do that. I'm going to wait until the market rejects, and then I'm going to start looking to set orders in through here, all through this zone right here. But this is what we're looking at. So we've had multiple day sits. So this is your zone of liquidity right here. This is that money zone. Okay. So break and retest is what we're looking for. Okay. So when whenever I asked Mike, I said, you know, what would you do? Mike suggested he was going to put his order right in this area right here. This is where he was looking to take his trade. Okay. So Mike got in at this level, and then the market immediately stopped him out. What we want to look for, in this instance though, and this is for anyone, is we want the market to tell us when the market actually does a break and retest. We want the market to tell us that it is actually a break and retest zone. Okay. So, and I've said this many times before, but those of you guys who are actually writing things down and then going and practicing what I'm saying, you're going to be way further. There's going to be some of you guys that next year you won't be working the current job that you're working right now because you have put in that amount of time. You have put that many hours in. So when I say the only difference, the only reason we don't immediately enter off a break and retest as opposed to an M top or a double bottom is because we want to see if that money, when it actually breaks out, if it's actually coming back to grab the liquidity from the break and retest zone and then go up, or if it's coming back in that zone to just fly straight through and go down. All you have to do is be patient in that. Remember how people people say on Instagram, patience is the number one thing that you need in trading. And like I said, there's all those little pieces out there. But you're actually talking to someone who understands how to teach it correctly and put those pieces together because they're actually doing it. So when I'm saying this, I'm saying it from experience. And whenever people, you hear them say patience is so important in trading, yeah, it is. But you got to know when to apply the patience. You got to know when to actually get in, and there's no need to sit here and wait for 4 days for a trade to actually hit, because when those double bottoms and those M tops actually occur and you got a small enough stop loss already set in place, then you come in on that trade and that's there goes your trade. You're coming in hot off of that. Now let's go back. Okay, let's go back here off this level. We're going to go off to the day again, and we're going to look in this instance. Okay, so we know what that is. So now break and retest. Obviously, that was a trade that we look at. Some of you guys may have gotten in and potentially gotten stopped out. Now, of course, it sounds really good to say, well, seeing it reject right here, I would have gotten in, and maybe you would have. Maybe you would have. Maybe that would have. Maybe you would have picked up one position there, and you would have said, I'm going to take one position all the way up here. I'm going to take another position and I'm going to put it right dead in the center like this. And this actually makes more sense whenever I look at this. Because those are actually all even numbers. Those are actually pretty even right there whenever I look at that. And that's pretty far enough below that line. And you look at that, because that would be pretty valid right there. If you look at this, this would be pretty valid. So maybe one position would have picked up on that. And that could be a quite possibility. Again, I don't trade this pair ever. I just ask for someone to do a random pair. So this is also far enough below that line right here. This is far enough below that line that would work. And this actually makes a lot more sense whenever I line it up, because they actually all line up near the top of the zone, the middle of the zone, and the bottom of the zone. That's why I was kind of confused. But maybe this is a zone that you get, and this thing definitely moves like that. This thing definitely moves. So you look at something like this, that's 3-to-1 to the top of that high right there. And I mean, again, I'm just saying this might have been something that you would have said, you know what, this is a good zone, because again, like I said, I don't ever trade this pair. Literally, I never look at it. So again, here we go. Pull this out. Okay. So here is your trend here. All right. There's your break and retest. Now, I got a question. Okay. So there's your break and retest zone. Now, Zach, in this instance, what are we looking at?
After the break and retest?
Yeah, what are you looking at in this instance? So you got break and retest
And we're saying we already took our trades.
okay, yep. So we could get one position in on this with our stop loss set below this spike down right here. We
Okay.
get one position. Okay. So what do we got?
Go back to the daily.
Okay. So you shift back to the
You
daily.
I would draw my uptrend line.
So from here to here?
No, from there up.
Okay. So why would you draw it? Let me ask you a critical question. Why would you draw an uptrend line right now?
Because we could be starting a new trend. Well, it's not a new trend, but we could be starting a more sharp uptrend right there.
Right.
And if we break out of liquidity, it could pull back to that line.
Right. So repeat what you just said. The first about 6 letters. We could do what'd you say? 6 words, sorry.
My first 6. Drawing a new trend line because it could be a sharper uptrend.
So you said it could be a new trend. So what would signify this being a new trend?
It's shooting to the upside, then pulling back.
Above this high?
Yes.
Okay. So why would you draw a line right now when you don't know that this is the trend?
I would just have it there for my reference. So I mean, like I know what I'm looking at when I draw that line. So if it price rejects and shoots up.
So what happens if price stops right here? What happens if price stops right here and goes down? Are you buying off this line?
No.
Okay. Okay, so you want price, and this is for everyone. This is not a trend yet until it breaks this high right here. So it needs to break that high, and that would validate what he just said 100%. It needs to do that, and then if it comes back, then what do we have? We also have it breaking this zone of liquidity here, and it comes back to another uptrend zone of liquidity. So that is pretty correct, but just remember, and it could go up from this line. It has everything that shows it could go up. But just remember, you want it to confirm the trend before you draw the line, because there's really no point in drawing the line at all before that. So, okay. So now you wait on this. So what do you do? So what goes on in your mind right now?
I'm just gonna let it play out and see what it does. If we're already in a trade,
Okay, so you're okay. So any
double. I
read
mean, there's an M
go
top up. There could be an M top up there off the daily, but I mean, I'm not sure yet until I let it play, let it go.
Okay. So in this instance, if it could be an M top, does it look like an M top? Like it could be an M top?
I mean, if it goes back up to that zone and starts rejecting, it could pull back. But
You're gonna
I mean, I
you're gonna
don't know
put
yet until I let it play out.
Are you gonna put a box up a gold zone so you know that it reminds you, or no?
Uh, no, probably not gonna put a gold box there.
Okay. So now you're just gonna let it play?
Yeah, I'm just gonna let it play.
Okay.
Because we already got in on that break and retest, and we got one trade in. We're gonna let it ride.
Okay. So now you're gonna let it play off this zone. All right. We're gonna pick some new somebody's about to ask a new question. I'm about to ask a new question. Sweaty palms. Who's next? I don't know. We're gonna figure it out though. We got 19 people on. We big lit. We started with 8 soldiers. We had 8 soldiers on. Me and Zach was on here 5 minutes chilling. We got 19 soldiers now. Oh,
Oh, there
all
goes
right.
spikes.
So now that price is up here, you're not taking a trade, because this is the tip of that tip.
I probably draw a box now and let price build up in that zone and make sure it doesn't break out.
Okay, so let me ask you this.
And then if it honors my 50 pip stop loss in that zone, then I could start, putting in my orders. Not putting in my orders in, but scaling it
Okay.
in.
Okay, so let me ask you this. When you do this, so you know it goes up there, how you drawing your lines? How are you drawing your box? This is a good one for you, because you always are like, man, my lines are a little off. So how would you draw it?
I would draw from end of day on the top 2 candles to the very top of that wick.
So you're going all the way up here.
From right there to the very top of that wick.
Okay.
And that's gonna give me my zone, and my stop loss is probably gonna go, well, this appears weird, but 10 pips above it,
Mm-hmm.
depending on how big the zone is.
Looks like a massive zone, but
Yeah, and then from there I can scale from like the very first touch of that box from the bottom to the middle and then to the back side.
okay. So got it. So now so you're going entry here like this. Okay, so that's like 1 1. So okay, so I don't really know what 10 pips is.
Yeah, I don't know what this is.
Yeah, I know. I'm just trying to figure this out. So let's just go with the 15. Let's just go with that one
Okay.
right. Okay, that's because that's off the 4 hour.
And then I'd probably pull my pending order price to the middle of that and then just pull it to match it.
So you're gonna go straight to the middle. So kind of like right there.
And then almost to the very back with my last one.
Okay, and then here we go. Everybody got to be paying attention. Almost about right there.
Yeah.
Nice. Okay, what are we doing with this? What are we doing with this trade? Anything?
If it rides 3 to 1, then it goes 3 to 1. But
Are you gonna Are you taking your trade? Or are you keeping it in? Are you taking half
I'm
profit, or what are you doing?
I'm probably taking it out because it becomes my stop loss is before my next zone or after my next zone of liquidity.
So you're gonna take full 3 to 1 position out.
Correct.
Okay. So this trade is done once price goes up
Yeah.
there. Okay.
Yeah, I'll no longer be looking at that.
We got 20. Never mind. 20 includes you. Yeah. Okay. So here's what we got right there. So now you're in 2 positions off of this. and you said you're taking your trade out at 3-1, so that trade would be done. So this trade is done. This trade is done. Now you went M top off of daily zone. You went M top off of daily zone. So you're cool. It's okay. Nice. Now with Mike, I'm gonna ask you again. Are you on the same page? Is this the same thing that you would look at doing now after the first stint? Is this the same thing
Yeah.
you would look at?
Yeah.
No, so
I'd wait. I'd wait
yeah,
a
I
little
wouldn't
bit
get
and
in.
see if it rejects.
Yeah, I'm not getting in. I'm not getting in right away. That's why I said earlier to let it build up
Yeah,
in the
I would
zone.
wait and see if it rejects because it's still pretty early.
Okay. So this is early. So let me make sure that we're all on the same page. So because you've seen you've seen an M top, you're like, okay, I'm gonna put my orders in. But now y'all are saying that you're not gonna take this trade. You're gonna let it build up first.
Yeah, I'm just putting my pending orders like how they, so I have it put there, but I'm not actually putting the trades in yet.
What's the
I'm
purpose?
just drawing it. I'm just drawing them out like how you have it.
But okay, so you wouldn't actually put trades in?
No, not at this moment until it builds up more price. Because if I look back to the left, it builds up price for almost a whole day or two right there on the left of that
So
before it actually shoots down.
how many hours is sufficient for a buildup of price then?
For end top, I would go off the daily.
So you're gonna wait days for it to build up?
I'm gonna see at least 2 to 3 days of rejection on that zone, and if not breaking through before I can take my trades.
So if the trade follows your stop loss, so if the trade follows M top protocol or double bottom protocol, no matter what, you're gonna negate that and you're gonna wait on days to build up.
Yeah, I'm gonna make sure it rejects that zone. Yep, that's what I'm gonna do.
Okay. So what we want to look for, and this is for everyone to write down, is when M tops and double bottoms appear, that's all you need for you to get into a trade. So you don't need days of building up, because if you can go back and you guys can go look at double bottoms and M tops, there's a lot of times, and just go back test it and you'll find it, that off of those daily candles, when we're looking at daily to weekly to monthly zones, when those things happen off of the day, a lot of times they sit there for some hours and then they take off in that next day or that specific day. So those are the only times, again, and I just said this, I do not let price build up, because it's already given you the stop loss. That's the stop loss. So what's going to happen is this thing is going to fly through this zone because everybody's selling the M top. That's what they're doing. That's what an M top is for. That's what a double bottom is for. So everybody's selling that. That's like the easiest trade in the book. But it's literally, the banks love this. They love this trade. So they're taking the trade right off of here, guys, and their stop loss is sitting right there. That's why the market flies through those zones, because there's so much money sitting to the upside, and they very rarely come right back down and then and do it off of a day. Sometimes they'll like kind of sit above and then take off, but for the most part they fly through. That's just what happens. So when you see an M top, when you see a double bottom, that's why I always say I just take them because it does it. Now, this is my least favorite M top to take off of a trade. Why? We got this big move here. We got it coming back into liquidity, and we got hella uptrend. Okay. So this is trading against the trend. This is trading against the trend. Okay. I wouldn't personally enjoy, nor do I like trading against the trend, but what I understand is the market can change direction at any given time. So it's valid to take this trade, and I want you guys to understand that it's valid to take this trade. You're going to have to lose. So, Zach, when we're talking about this, there's no point in putting a pending order in on TradingView and not taking a trade in real, like on your account. So you either gotta take this trade or not. So what's your final answer for Who Wants to Be a Millionaire?
Without you saying don't wait on M tops or double bottoms, I guess I'm definitely taking it.
Okay, there you go. So we're not waiting on it because these trades can pay out heavy. Now there's different strategies that you guys can use to catch breakout trades. I used to do them all the time. Well, let me put it this way. I used to actually show you guys about them. I don't want to confuse people who haven't been doing it for a while, but all you do on a breakout trade is you just set your pending order pretty much above your stop loss order, and you set that as your pending order, and then you set your stop loss about like this inside of the liquidity, so that if it comes back and taps this zone right here, what you're actually looking at doing is it's coming back, might tap it a little bit, but then it just takes off, because it's basically like this right here. This would be kind of it, like this. That would be kind of it. So I'd adjust this up some, kind of like that, and that would be kind of the trade. So yes, that's an M top off the daily. You take it, and it is what it is. So there's your stop loss hit off of that zone. Well, I guess I know I kind of moved it, but there's your stop loss. They got hit off of that, and you see how the pending order is placed above here, and that actually did not hit it off of that area. So when you see that, that's what we want. And see how price came back down even deeper into that. So that didn't break out. That just went and took out people's orders. So the more I like how I see this, and I look at this right here, I wouldn't be looking to like these kind of sizes of stop losses, like looking at this right here, you can kind of see like those are a little bit too small. Like these are the way these are. It came back in liquidity again right there. It came back and popped that zone off that. So I would have to like back test this more, because again, I've never even looked at this trade in my life, or this chart in my life. But I mean, looking at it, price action pretty much moves the same. But you have to just go and look, and again, know your pair. Like all of the different pairs that we're looking at are all currency pairs that I'm doing, or like really good moving um, pairs that a lot of people trade. So when you see this and you see what this is going, so remember, look, there comes this zone back here. You look at this right here. Fuck, I forgot to do this. You guys see how price, and I was just talking my little heart out. So you guys see how price went up here and tapped this little stop loss, but see how it would not hit this zone right here, okay? That's what you want to see. So as you see where I put my trade, if I'm trying to catch a breakout trade, I put it above my stop loss, because we don't want both of our trades to get hit and then just immediately lose. But whenever you look at this here, I just put these stop losses on because felt like they would kind of work over here. It seems like $1.50, so maybe $2, maybe $2, 150 and 1.5 and 1, because you have to kind of see how these pairs really go. But do you see how price spiked back into the zone of liquidity right here? So let's go back and replay this, because like I said, I was talking, but we go back and replay this, okay? So we see this here, right? So look at this, okay? So there's that zone of M top, and this is what we want. This is exactly what we want. There's our zone. Place our stop above. It's okay if it hits it, but you see it does end up following the M top protocol. You can see that, right? But what happens is it shot down and price shot back up. So if we go and look, okay, so let's look at this off the day. Okay, so I was like, what is this thing doing? So see how it came down and came back up? See this right here, this little movement, this move here? You guys see how price came back into that zone? This is the kind of stuff that you want to see happen. These are the kind of things that you want to look at. So when price goes in, and I literally just said this is one that when it's from just looking at it quickly, I haven't really figured out the stop losses yet because this is such a small like dollar amount, and usually the market trades off of dollar amounts, not our stops, not like our stops, like, oh, 15 pips, 20 pips. No, they usually trade off of dollar amounts. That's why we call them bank zones. That's why we call them order block zones, because what banks do, they're trading on those currency pairs. They're trading to eat at round numbers. So the currency gets value. You see this little chart right here that says performance. So you have investors that are investing their money, millions of dollars, into the market, and the people trading it are trading it based off of like looking at like, oh, we're up 1% in a week, and like you go look and be like, oh, well, it was all the way down here last week, and now it's all the way up here, right? And they're looking things more off of a 3 month, 6 month, year basis is what they're looking at it off of. So when you see this, like they're up 10% off of $1 million in 3 months, that's something good for them. That's $100,000. 6 months, they're up 24%, but they go based off of those round numbers. So that's why the currencies are a lot easier to trade, because they take a little bit longer to kind of happen. But have you noticed that when they really, really move, they really, really move really hard for days in certain directions. So what I'm doing is I'm showing you guys how to take that day direction, that week direction, that month direction, and be patient enough to wait on the market to build up in that zone. And then when you're patient enough to let the market build up in that zone, then you can go in and you can hold your trade for days, and you can make a lot of money, and which equals percentages. You can make a lot of percent, and then that leads to you making a lot of money. So when you come back and you look at this, see how that spiked back up in that zone? So when we see this, it may be like this, guys, and I don't know. Again, I don't really know how to trade this pair, but I can just go from based off of what I know is I might be switching my stop losses up, but this is how you go and back test, guys. And when you go and find the sweet spots for your stop losses for the pairs, that's why I said like pick like 5 to 10 pairs, like somewhere around there, or at least like 5 pairs, because 2 to 3 times a month you're going to get a 20% ROI trade. And if you go and you back test it just like we're doing right now, it's going to pay off a lot. So when we look at this specific instance, you may be like, you know what, I don't need this big I don't need to go this wide of zones, because if this pair always spikes back into liquidity, that's why I like with on this one, I was like going and doing like a larger one and coming down here with the stops. But looking at this, you might go and adjust it and say, okay, well, I don't need that big of a stop. So this might not be your zone. And you might say, I want it to go to the middle of that zone and live with it. That's what I was saying down here. I was like, you just live with it going to those zones. And if it goes in your direction, okay, you just didn't get in the trade. You're basically correct on your direction. You'll get it. You'll get the next trade. That's the kind of mentality you have to have. So it might be like, okay, I'm gonna get in right off of this middle zone right here. Or I'm gonna get in off of the back of this zone right here. And you go and you look at that and you see that and you adjust and you say, okay, I'm gonna get in off the middle. I'm gonna go in off of this zone right here, and then I'm gonna go in at the very back of that zone. That's gonna be the kind of things that you have to go and you look at and you see. So when you see this spiking back up, so going and moving this where it was just at, putting this where it was just at, making sure, yep, that's where they all were, because all those would have hit stops right there. Yeah, I can't adjust them anymore because that's like right at the back of that zone in here, right there. So you see this thing spiking back. This is coming back up into that zone of liquidity. That's what we want to see. These are the kind of things that you want to see happen. You can adjust the stop above the wick if you want to adjust the stop above the wick. But what's most likely going to happen, guys, a little trick, is you see these closes of the candles right here? You see these closes of the candle right here? Watch this. See these closes right here? See these closes right here? Do you notice how these spike right to this close right here and it drops immediately? The closes of the candles is the strongest point of reversal. I tell you guys this all the time. So really, you just want to make sure that these stops are set above this wick right here. Once it comes down and spikes in back through and comes back into liquidity, you might have got on this one, but understand something. Price going back up into liquidity off of an M top is very normal to happen. Price going back into liquidity off of a break and retest is very normal. Why is it normal? Because if the market is going to reverse and go heavy in that direction, it doesn't always do it off of the first immediate touch. And almost always, it's going to come back into that zone of liquidity. That's almost always is going to end up happening. So the market might have needed your positions to go down in that area, or it might have needed your money to go down. Those things happen. And then sometimes it just flies in that direction. But as price comes back in and spikes in that zone, it came back in and it grabbed more money. So it got more buyers involved to think the price is going to go up, and it came back and hit the zone. And then it's shooting back down to the downside. So those things are very normal to happen. So when we see this, that spike that came to the upside, I just want you guys to be aware of that, okay? Because those things are very normal to happen. So we're going through today. We're really getting in deep into the charts and making sure that you guys are really understanding of the different things that are happening. This is the zone of liquidity right here. As you guys see, this is that zone in here. So if this thing goes, it came back and hit that little level right there, can go deeper in off of this area. So got a question. So this thing came up, and if you look at this just off of this instance, so 3-to-1 is like here in the zone of liquidity. 3-to-1 is here in the zone of liquidity. So no stop loss getting hit. 3-to-1 is here in this liquidity. So if you look at this, this is that. So seeing this, we get a stop loss hit on that. And that's totally fine. This thing here comes down 7.6. That goes down to 4. And this goes down to 2. So we're looking at a really nice little 13%, 14% trade off of this instance, and seeing this from September 11th all the way to the 13th. That's just a couple of days. And again, I'm just looking at how this moves because, like I said, I never trade this. But seeing the kind of stop loss that we did, what I'm wanting to see is $1.5, $1.50 stop loss on this specific instance. That's actually a good amount. That's a pretty big stop loss from what it looks like to me on there. But again, it just doesn't take very long for it to go over 10% ROI. So in this specific instance, so let me reverse this thing back to here. Okay. So what would you guys do if price comes back down to this zone right here? Are you looking, and remember, Zach, what we were looking for whenever I said you want that thing to actually go up, like you want it to actually have gone up. So see how this thing came back into that zone right there? So the reason why we do that, you already know what happens now. It reversed off of this zone. That line that Zach drew, this is why I'm going back over this, is because, again, you guys are starting to see why some of the things that you guys have told me is that you're still looking at that retail mindset. So what I want to get you is out of that retail mindset to where you're not coming into specific trades and being like, oh, this is a good zone. Oh yeah, this is nice. No. So you want to get away from that. So this is that original line that he was like, okay, I would have drawn it off of that level. But further into this, what I was saying is we needed to, and he cleared this up, break that high. And that's what I was saying. We needed to break the high. Do you see how price came down at this zone right here? And it went up right at that area? That's not by mistake. So this is a line of liquidity. Like you can see this is the line. But this right here is not the real zone of where the banks are or anybody who has real money into this. The banks, institutions, university, this is not their line right here, okay? They're trading off of this M top right now. Okay, this is where they're at. They're trading off of this line through here. This is where they're at. This is their zone of money here. This is their zone of money. So for that to come up right there, yeah, I mean that's a zone where they know. You have to think in their mind, they know lots of retail traders are going to get in this. So we're going to spike it up right there, and they might just miss it. And so what we'll do is we'll spike it up right there, and then we'll make sure that we hold price on this line right here. Just on this line, we'll hold it, and we'll get them to think that thing's about to fly up again. And then what begins to happen, see how it just holds right off of that zone, right off of that level, right there. They see, oh, double bottom right there. It did the little thing right there. It's holding on that zone. And so you got to think what they're like, okay, now what we do is when that happens, they could kind of push price up like that, or they can just push price straight down, whip out all the stop losses right there. They take all that money out, and then guess what they go and hit? They go hit the real money zone, which is right here for them. That's where the real money is at for them. So you begin to see this is where that's at. So what I'm doing is I'm taking you in the mind of a retail trader, and I'm taking you in the mind of a bank. I understand exactly how both sides of the system actually work. When I say bank, I just mean any brokerage firm, um, anything that has money that sees the mind of the retail, right? Because a lot of these places make a ridiculous amount of money off of people just depositing their money into brokerages or firms and all these different things. You're freely giving them money. I mean, you go to a bank and you're like, here, just take my paycheck every week. I trust you with it. And they're sitting there and they're looking like, yep, we got a million people that just gave us, oh, $1,000? How much money is that? And these are in cities and places all around the world. One bank, right? If you guys ever seen Too Big to Fail, go watch that. It's a pretty good description of how the banking system is. Um, and it talks about how there was a lot of major banks. Now there's only 4 major banks: Chase, Citi, Bank of America, BOA, and Wells. Those are the 4 that survived the Too Big to Fail. Okay, so understanding this, it's important to know the psychology of these moves. So you got to think when you see these retail lines, you're thinking, oh, retail zone, not a zone for me. That zone spikes back up into the real money of liquidity. That's the zone for me. That's the zone. So you're looking to say, okay, here's my entry zone. Here's my entry zone. So what we're doing is I'm getting you guys out of this mindset, right, of putting these kind of positions on and just losing money for no reason. There's no reason to be losing money like at all. And when I say losing money at all, to rephrase this better, there's no reason to be losing money that you can control by simply being patient enough to let the market build up and give you the zones of where your stops are. So when you see this, why did I redraw that? I had a really good feeling that where that thing spiked up at was probably on that line that Zach originally was talking about putting. But when you see this, the retail zone. So stop that we put in right there would have gotten hit. If that was a trade that, if that was like I don't know, we don't look at the dollar amounts over here and we just look at this thing and we say, you know, from here to here, and we say that let's just pick in our mind that 112 is 112 pips. So you think that's 112, so that's 120, right? So basically we got 110, 120, and you think 130, that's 20 pips above, or yeah, that's 20 pips above. We just live with getting our stop hit. That would just be a stop punt. So just remember that we're doing it a little bit bigger here, but just remember, you put your stops 20 pips above the high, you're most likely going to be fine. Like the real actual high of where the money is, I would say 8 times out of 10, you're going to be fine. And that means that when you're fine, those other 8 out of 10 times, you're going 3 to 1 in profit. 100% going 3 to 1 in profit. So you think that's okay for that to happen. We're going to lose on stuff like that. But what you can't be sitting here doing is this retail trade. This isn't the move right here, guys. This isn't the move right here, okay? This is the zone of money right here. That's what we're looking for, okay? That's what we want to see. So if price goes back up, okay? If price goes back up, all right, to the level up there. Boy, if you don't move. Oh, look at the Mackie Mac. What are we at? 10%. We'll be fine. If price goes back up to here, off this M top, okay, right off of this level right here. If it goes back up to there, are you taking a trade at that high? Are you taking a trade at that high, Krista? Yes or no? Are you taking a trade at that high? If this rejected, are you taking a trade off that high right there? You came on a little late, but I'm having people unmute themselves and tell me what they think. But if you want to just say yes or no, that's fine because it's just a yes or no question. So I just want to know, are you taking a trade off of that high if price goes back up to that zone? Yes or no? Krista, don't tell me you ain't there and you just showing up. You just showing up to say what's good, to just have your name up there. Uh-oh. Krista's not there, y'all. Are you taking a high, or are you taking a high? Are you taking a trade? Oh, you said you're here. Okay. So, okay. Because I was about to ask someone else. Yes or no? If price goes back up to there, yes or no? Are you taking a trade? Oh, I got you. Are you able to say yes or no? Yes, no, maybe. Yes, no, maybe. I just want to know. Yes or no? Sí or no? Sí? No? No one? Okay. So no answer. MJ, you taking a trade? Yes or no off of this? If it rejects here, yes or no trade?
What's the question again?
Are you taking a trade off of this M top right here? If price comes back up, if it rejects off here and price comes back here, are you taking a trade?
Yes.
Okay. That's all I needed to know. Now, so we know price comes all the way down. So MJ says you're going to take a trade right there. Now, let's see. Rebecca, are you going to take a trade off of this zone right here if price comes back down to this zone of liquidity? We know price gets in that level, but are you going to take a trade off that? Rebecca watching the sunset, y'all. She out there on a yacht right now. She gone. Rebecca, you there? Yes or no? Trade off of this zone. Yes or no? If price comes back down here, we know it hit there. Are you taking a trade? Tim, are you taking a trade if price comes back into the zone right here? Price comes back into zone.
No, it's just not my kind of trade to buy.
That's not your kind of trade?
No,
Fair
that's just
enough.
my opinion, though.
Fair enough. Hey, that's fine. That's not your kind of trade. That's totally fine. Okay. So off that level, then you say no, that's not your kind of trade.
But
Sebastian,
I would definitely sell it if it were to come back up into the 300 area.
you'd sell it up here. Wait.
Yeah.
Right here? It's already in the 300
No,
area.
oh, no. I'm saying, like, if it were to come back up to that liquidity zone, then I would take a trade off.
302 to 303.
Yeah, in between those numbers or in between that zone, yeah, I would. I would
Okay.
definitely sell it.
Nice. Sebastian, trade on this zone right here at all? Yes or no?
That's a negative, Ranger.
Why?
Unless I see some build up and something that gives me a sure sign to put the stop, something that the market kind of gives me to take, potentially, yeah. But I want to see where it comes down to on the line, and if it goes in between the two lines, if it shoots down a little bit, kind of see where it stands once it gets there.
Got it. Okay. So MJ and Tim said they're taking sales up here, and Tim said this isn't his kind of trade, and Sebastian said he's going to wait until some kind of buildup happens. So we're going to let it play. We're going to let it play out. Okay. So how much buildup is buildup, Sebastian? So is that enough buildup, or do you need to see it come deeper in and reject?
We're on the 1 hour. That's like half a day, give or take. If it touches down again, yeah, that would be a good stop based on what just happened there. Does it make sense?
Mm-hmm. So you're saying if it would have came up and then hit over here, it would work?
Yeah. To me, just because it kind of gave me a sure sign that it's rejecting still there, and there's still a buy zone on that off that line, then I would take it. But it was like what, maybe 4 or 5 hours. I was like intraday, like scalping, maybe, but not to give me a sure confirmation.
Mm-hmm. So, got you. So within this zone, all that stuff makes 100% sense. That's not Tim's kind of trade. Sebastian will want more of a build-up in there, and all that is perfect. All that stuff is totally will be whenever you need that. That's you can always fall back on. It's not your trade setup because that's totally fine. And you can always fall back on, I want to make sure that the market builds up a sufficient amount of um, capital in that area or liquidity in that area, and then you will go to look to take the trade after that. So all that makes sense, and all that works. So with that, I can totally agree with that. I'm not going to go into any more depth about that. So now we got the people who said they would definitely take a trade here. My next question, MJ and Tim. Tim, where are you setting your stops in this instance? Because you said 100% you're taking a trade right here.
I would actually place my sell limit around 303.
So you're going at the
And
very tip. So up here?
yeah, I will put multiple positions though that
So you're
equal
going,
3%. and
So you
I
go
would
stop
put
above
my
this high? How high?
something like that.
How far are you going up?
For the stop loss,
Mm-hmm. Like right here? Or higher?
a little lower.
Like right there?
Lower than that, but yeah,
Like that?
like that.
And this is your first order right here?
That would be my first order. Then my second order would go a little bit below the below the first order, and then my third order would
So
go.
down here? Down? Or
Yeah,
oh, so that's not your first okay. So
yeah.
so this is it gonna go like right here?
Let's put it up just a tad bit.
Right there?
Yeah.
Okay. And then we're going another one below that, right?
Uh-huh.
Like that?
Yeah.
Okay. MJ, do you agree with Tim on those zones? You said stop right above the wick. Is that's what you agree? You agree with
Yep,
that?
I agree with him.
Okay. So you guys said 100%.
Right.
You guys are taking those trades, so let's watch it. Off of that,
Watch it.
so those are your guys' setups that you're looking for. Off of that, entries on liquidity, market building up off that level, holding, spike up,
I
got
am sweating bullets right now.
boom, got all your orders hit right there. All of them are in.
Hell yeah.
And let's see what we got here so far. Off of this, these are all the orders. So every order got hit. Stop loss placement was very nice. Off of
Call us Sniper FX.
small
Yeah.
smallest one is looking here. This is the other one for 3-1, and the last one is Buzz Lightyear Infinity and Beyond 3-1. So there are your zones right there off of that. So those are your zones of liquidity off of that. So looking nice off of those zones. Where's this? Is there a weekend or anything? Nope. So yeah, spike down. That was right at 3-1. That means that one was at like 1.5-1, and that one was at like almost 1-1 off of that spike back in the zone of liquidity. And what did it do? You guys remember? It came back up in that zone again. This one is really close to 3-1 again. That one's 3-1 hit. Let's see, this happened on the 17th of September. This is the 20th of September. So that's at a 3-1. Oh, fuck. It already went up. I was about to ask before this thing went up. Question for you. I didn't ask. MJ, are you gonna take your smallest 3-1 position out and let the other two ride? Or are you just gonna let them sit? You would have been up 2-1. So you'd have been up 3, 2, 1.5.
And your question is, am I gonna take the smallest one out?
Yep. Are you? I don't know how you do it. Do you take it out when one of your positions hits 3-1, or do you let? What's the way that you have chosen to do it?
I would have most likely taken them out at the 3-1. I'm gonna be 100% honest.
Yeah. So that's why I wish that this thing didn't happen because we obviously know this thing goes up. But so you're gonna take one out, let the other two ride.
We'll probably take two out and let one ride.
Okay, which two?
I would take the first two and let the one with the smallest
So 5.
stop loss ride.
Okay, so you're taking out 3. You're going to take out about almost 4%. 2.2 to yeah, because the end of the day is right here. This is the end of the day. This is the end of the day right there.
Yep, sounds about right.
Yeah, because the next end of the day is coming there. So okay, so you're taking out 2, 3. You're taking out almost 4 to 1. Tim, how do you have your strategy set up? How do you do it? Do you take one out at 3 to 1 and then the next one out at 3 to 1 and the next one out at 3 to 1, or how do you do it?
Usually I take 2 out and let the last one ride.
So in this specific instance,
yeah.
would that happen in here?
It honestly just depends how far it goes in my direction, really. If it's at like a 3
how
or
far, how fast it goes in your direction?
maybe 3 to 1 minimum.
No. Listen to what I'm saying. How
Oh.
far or how fast it goes in your direction?
Oh. Far.
Okay. So let me good teaching moment. So look at how fast it goes in your direction. So the thing is, it's going to kind of be a double-edged sword. What's going to happen is it's going to go really fast in your direction, and then what's going to happen is that's most likely means it's going to go further in your direction. So when you look at this, and this is for everyone, this one right here, had this thing shot straight down to like here, okay, within those amount of hours, what's most likely going to happen if it shoots all the way down here? Here's what happens with the market, guys. It shoots down really hard in your direction, and then what happens is it actually begins to consolidate lower where it was. Okay? So this consolidation happened up here. Okay? This is where that consolidation happened. And we know where the consolidation happened. It happened right on top of this monthly zone right here that we know is a break and retest. And this is how things like build up off of monthly. And then it shot up really hard. So when you guys see that, what's going on is how fast it goes in your direction is what is actually telling you that you could have a really good potential for it to go even further, and with the consolidation that's actually happened. So look at how fast it moves in your direction. So if you got one of your trades that's already jumped to 6 to 1 in profit off of your smallest one, 7 to 1 in profit, that means you're looking at your second position at 3 to 1 to 3.5 to 1 to 4 to 1. And your biggest position is looking at probably 2 to 1 minimally. So that thing is really just pushing in your direction. And what happens is when you have one position sitting at 6 to 1 and another one sitting at 3 to 1 or 4 to 1, and then another one sitting at 2 to 1, you have over a 10% trade off of 3% risk. So that trade has flew in your direction, basically 11 to 1, 10 to 1, 11 to 1, 12 to 1. And that's a good time to take out a position. Like to be like, okay, you know what? Let me just chop down to let me just chop down to let me take 3 to 1 of my trade out. You can just take a little bit off of each position and it's totally okay. You just take a little bit off of each position and you just liquidated 3%. And what'll happen is when you liquidated that 3%, you got a lot of room for that thing to ride. So a really good teaching lesson for you guys on this. There's been a lot of really good teaching lessons. This is why I want to do this and switch it up, because there's going to be something new that comes up all the time. But when we do this, I get to be in y'all's mind even more. And then you get to see what you guys are actually thinking and you put it out there, because I'm not calling anyone out in a negative way. I'm just putting you guys out there in a place where you actually have to talk about what you've learned, and it's only going to make you better at the end of the day. So when we do this, you can get to see kind of like, okay, what would you, okay, so look at it this way. Look at tweaking it like this. Look at fixing it like this, because that's only going to help you so much more every single time. So anyone to see this, look at how fast it goes in your direction. That's going to show you basically like how right you were, right? That's going to basically show you like how correct you were on that move. So when you start to see, like, when you get in, you should be on the tail end. So two things should happen, guys. Number one, when you get in, price should fly through your order. Hit your stop loss and keep going, right? It should be nowhere near right to what you were looking at. Other thing, it should hit your order, pick your order up, build up on it for a little bit, and fly in your direction. Those two things should happen every single time that you get in a trade. When you get in a trade, you should be sitting in it for no longer than like a day before you start seeing that thing move in your direction. Like seeing it, you don't want to see your trade negative. Like being negative all the time and just staying negative, that means you most likely got a not very good entry. Now your bottom entry is fine for it to be negative, but when you get that middle to that top one, you should be that top one should be balancing out. Damn, did it end? I totally forgot. Can y'all hear me?
No.
Okay.
Hello? Hello? No?
Yeah, I can hear you.
Okay, perfect. Is my screen still up? I forgot my computer died. I forgot about it. This brand new ass computer, and I never had the other one die on me, but this one, oh my god, my freaking charger came out. Never that other one has ever died on me. Plug in, dude. My bad, y'all. I yelled loud. I don't know if anybody heard me. I was not happy about that. Yeah, that thing died. Okay, cool. Gets a new laptop. Just, yeah, right. This thing ain't never died. Anyway, God, I'm so glad that this recording stayed up. I was like really gonna be upset at this because this is a really good one. So anyway, so when you guys are doing this again, when those things really, really move in your direction, that's what you're looking for. The kind of, I gotta sit somewhere else now. The kind of trajectory that these things move, guys, is gonna tell you a lot. And then liquidating some money whenever they move in that direction is really, really important. That you take some kind of money off of it, because it's gonna help you, because then you can let the rest of your positions ride, and you still let the market pay you. That's what you let happen. So those things are super, super important for those things to happen. So again, this was a nice trade setup. This was a zone of liquidity right here. We knew it spiked up in there. Those orders that you did, Tim, are really good as well. And the placement that you put everything, you put it above, really nice zone of liquidity up there. And this ended up being a nice trade. I mean, this was 3-1. This was 5-1. This was almost a 7-1 trade. On that instance, that's, depending if you did 1% each, that's 7% ROI in a matter of about 2 days. So you're looking at about 7% ROI in 2 days. But then, of course, you have to ask yourself, what are you taking out? You're liquidating 3.5%, 3%. That's what you're looking at doing, and then you're letting the rest ride. That's fine. Those trades come back up. You're only losing. Actually, you're not losing anything on that trade, and you're going to gain. So you'll still be up 1%, 1.5% off of that, which is fine because you're looking for a bigger move, and I totally get that. So let's rewind this real quick, and this will be one of the last things that I go over. So again, I yelled so loud whenever my computer died. Great. I can't believe this computer died. That other one that I had for Nay never died on me one webinar. So you guys see this now, right? So you see what just happened. You see the zone through here. We know what this is through here. It built and stayed above this zone of liquidity. You guys see that? It built and stayed above that. That's that little zone of liquidity that it made before, right there. That's that M top that it did, came back down. It touched liquidity again off of that level. That's what it went back and hit. Okay. So that's just it going back in. Now, in this instance, what I'd be looking at is this thing to fly up. I mean, looking at what it just did here, it negated the M top. It went back for a second time hard back in that zone. To me, this thing is going to fly up through this because it has a lot of money sitting right up there. But I will just play it to see what happens. I'm just curious to see what happens. So it came down there in the zone, spiked up, hit it in that level, hit some zones right there. Yep, there we go. Spiked right through. Off that. Came right back in liquidity. I was about to ask what would be done in that level. So, Mike, what are we looking at, my man? Mike's still on here? Yeah, he's still on here. What are we looking at, bro? You taking this break and retest trade?
Yeah.
Okay. So with that, what do you you're gonna take the break? Okay. Let me do that. Let me do this real quick. So let me find the close of the day. Okay, here's the close of the day right here. Let me take that back just one more. Okay, so you said you are taking that break and retest.
Oh, off that gold box?
Mm-hmm.
No, I probably wouldn't.
Why?
I don't know how I feel about that.
Okay, well, why? Why wouldn't you take it?
I don't know. I just don't feel comfortable. I just don't feel comfortable.
That man said he don't feel comfortable. Okay, so let's go back and simplify this because this is what I want you to get down. I want it to be simple for you. Okay, it just needs to be like breathing. You don't even need to think about it. You don't feel I don't want you. Do you feel comfortable breathing?
Yeah, bro.
Okay. So we want to make sure you feel comfortable looking at the charts. Okay, what did you say to me over here? I picked on you again for a reason, right? And I chose you, okay? So you got these candles, right? What were you saying that was really good that we got you to towards the end right there?
I need to wait.
Okay, but what were we waiting on?
It build up in the liquidity zones so I can see my stop loss and see.
Okay, before that though, you're gonna let it build up. Okay, that makes sense. But what before that? What comes first?
I don't.
What you playing Call of Duty while you on the charts? You look,
No,
might go back to playing Call of Duty. Zach, whenever he done, he go right back to playing Call of Duty. He be on what you playing on your phone, bro?
no, bro.
You didn't write this down? This is important. You trying to make millions in trading, right?
Yeah, bro.
Okay. So what did you say? You said what did you say about what you were doing? So you said you don't feel comfortable. Well, why don't you feel? What's telling you that you don't feel comfortable with? What is it?
I guess it'd be a mental thing. I guess. I don't know.
See, but that's what we're trying to get away from. We're trying to get away from the mental. We're trying to get away from all that stuff. We're trying to be in flow with the market. You know that notebook you got?
Yeah,
What does the spine of it say?
I'm one with the market.
Bud, are you one with the market or are you confused?
I
Are you
guess both
uncomfortable?
right now.
Are you
Shit.
uncomfortable with the market? Are you can you breathe with the market? What you doing?
Trying to, bub. Trying to.
What?
Shit.
Talk to me then. So so I'm gonna give you
Okay, so if I was to take the trade,
okay, here we go. We talking. Okay, talk to me. If you was to take the trade with
if
this
I
with this
was to take
grammar,
the
okay.
break and retest trade,
Okay.
go on the 4 hour real fast.
Wait. Why do I need to go to the 4? Why are we going to retail zones?
Yeah, I guess you're right.
Mm-hmm. So we gonna get this lesson down. This is gonna be for you and everybody who don't have this down yet. So we're on the day. So what do we need for a breakout trade to happen? Break and retest. How many days do we need it to stay above a zone?
You said at least 2 or 3, didn't you, earlier?
Well, you said 2 to 3. I said 3, right?
3.
So
Yeah.
so let's see. You are on okay, so you're on your computer. So on your so I know you playing Minecraft right now on your computer. So go on the notes. So just pause that real quick. Go on your notes and write down I need 3 daily candles to break above the liquidity zone before I even consider break and retest. Just write that down. Or you can put it in your phone and text it to me, and then I know you got it. Put it in the VPA.
Yeah.
Put it in our Soil chat.
Chat.
Hey, if he don't do it, Zach, then we know he ain't about it, bro. So you need 3 days. 3 days. 3 days to break above. Okay. 3 days. So right there, that's a day. So we need another day, right?
Yeah.
For it to go above. Okay, so we needed another day to go above. Okay, so boom. That's 2 right there. See that? Is that 3 days or 2 days?
Still.
That's 2. That's 2 days right there. So we need 2 days to break above 3 days to break above this. Okay. So when we see this, right, what we're looking for is we're looking for those 3 days to break above. Okay. Now, are you feeling more comfortable?
Yeah.
Yeah, okay, cool. I just want to make sure you're feeling comfortable. I don't need you feeling uncomfortable in the market. There ain't no reason to be uncomfortable.
Yeah, because I think I saw that like I've got a tendency to take the trades too early. I think
That's
I've
good.
noticed that before even today.
100%. Yeah, yeah. I mean, yeah. If in this about 1-2 hour time span that I asked you between this candle and you still gave me the same answer from this time to this time, it wouldn't be
Yeah.
surprising to me that you still get in trades too early.
Yeah.
I wouldn't be shocked. And then for any of you guys, like if you said in your mind, oh yeah, that looked good off that break and retest off that 4 hour right there. I'm definitely getting in right there, right? Just give it some time. It'll tell you because what'll happen, you'll see it. What'll happen is price is gonna hold right here. Okay, watch this. Don't even 100% know what it's gonna do, but if it does, it's gonna hold right here. It's gonna hold about right in this zone right here. This is where it's gonna hold at if it stays. Okay. This zone right here is going to be your stop loss level. It's going to come back down and hit this zone right here, and your stop loss is going to go below that if it holds in that zone. Okay, so we're just going to see. If not, it just goes up. That's fine. So okay, let me ask you this: you selling right there?
Yeah.
Why are you selling right there?
A triple top?
You a triple top trader?
No.
You a two top trader?
I guess I'm going against my strategy, bud.
There
But
you go.
no.
See, this is what you got to get down. This is what you got to get down right here. Is this? I
Yeah.
don't want you paying $150 for no reason. I don't need the
Yeah.
150. You need the 150. I need you to come on here, and any of you guys, I want y'all to be coming on here and actually it's an investment for you, right? And you guys are actually coming on here and saying, okay, yeah, boom, I know what I'm doing. I got this down. Like I'm actually coming on here and getting this down. So you see right there, this little area right here, this little booger right here, this for you to take a trade up there, and any of you guys, it needs to do this, There you go. Now you're going up there. That's your daily zone. Coming down here, even this is fine there, because that's at least is a daily zone of liquidity right there. It's just popping off right there. So when you do that, and for any of you guys, what we're doing is, this is not a trade. Now this thing can go down, cool, that's fine right there. But what's going to happen is when you got real money, what the market's going to do is you're going to take a trade off of this zone right here, and you're going to say put the stop loss like that right there when we know that it goes up to that zone. This is kind of going to be like your setup right here. And what it's going to do is going to go up and spike this out right here. It'll hit this area, especially when you got the money. It might not do that right now, but when you got the money, that thing can spike all the way up, hit those zones, right? Anywhere in here. See that right there? Go and spike that right there, hold at that level, and then just take off like that. So see, that's your retail zone right there. You see that? How that's your retail zone, gives you a little bit of hint that it's going in your direction. Real nice. See that little battle right there? That's where liquidity is at there. That little move that it does right here gives you the hope that you need, that you're 0.6 in profit. And then there goes your trade right there. So see, that's a retail zone. We don't want to be on those retail zones. That's what we want to get away from. Is trading on those retail zones. So you guys are really going to have to be paying attention when you guys get on here, because, I mean, one, I would just pay attention because I would not want to work a job. Like, I would want to be like, okay, like, I want to get out of wherever I'm at right now. Like, I want to get this down and make millions from Forex. Like, I mean, that's why I'd be wanting to pay attention and really doing this. But, I mean, for other reasons, I mean, this is uptrending really nicely. There's other zones and things that come into play, and you can see there is your look, 1 2 3. See that, Mike? There goes your 3 days. And Zach, we might even get your little uptrend through here. Oh no, it didn't do it. Got close, got real close to that line. That might be a line that comes into play, but that's a little bit better. But yeah, so when we're doing this, guys, I'm going to be calling on you. It's not going to be all the time, but now that we've had those 4 sessions and guys have kind of got a little time to, put in the, see what I'm doing, and then see how I'm getting these and what we're waiting on, because we've had in those 4 different sessions, it's been a little bit different every single session. It's all been different every single session. So, in doing this, and that's why this session that we're doing now, is so important, because I wanted to call on a bunch of random people. I didn't call on everyone, because next time I got you guys, it may not be next week, it may be the week after that. But just really, really connecting with your minds and what you're thinking of whenever you get into these markets, because I can see, and some of you guys can see kind of where your flaws are at, and where you're going to be getting in a little bit too early. And really, it's just you guys are getting in too early. Like, that's all it is. But it makes sense, because again, we're getting out of, we're all I'm doing is we're unlearning, right? We're reprogramming your mind, deprogramming from the retail mindset to the banks and institutions and university level, where the ones who have the market, they have to, it has to come back into those zones of liquidity, because the moves that they're going to make are going to be big. They're going to be big. They're going to be like these things down here. Whenever you look at these performance over the 6 month, year to date, 3 month, those kind of things, because they're going to be holding positions for a minute, and they're going to just be getting in over and over again, over and over again. So these things are going to be important, guys, that you get this stuff down, and that you have this. And again, my motivation is going to be like, I'm not trying to be, working. Like, I'm trying to like I'm trying to like get out of, the job or anything like that. Like, I'm trying to make sure that, I can live a really nice lifestyle. I can wake up whenever I want to. I don't have to set an alarm. I can go to any country that I want. I can sit and play the game all day if I want. I can sit and watch TV if I want, because I have a way that I get paid through passive and residual income. That's what I would be looking at and I would want to do. So, and not everyone thinks the same way, but you guys got to have a why, within yourself, that you got to be like, I'm grinding on this, like I'm getting better. So those things are important. Like I said, they said that we were in a recession, but I don't feel that way. I've made the most money I've ever made in my life in the last 2.5 years. Like I'm not even affected by it. And that's where I want your guys' mentality to get to. I don't want you guys going and listening to, people who, like, if you read my post today, I said some real stuff in my post. Like, you talk about people are saying that they want you to save money, but who are the people that are telling you to save money? Do these people have millions of dollars? I bet they don't have millions of dollars if they're telling you to save your money. Because, again, you want to talk about saying you're in a recession. Well, so the same money that you had 5 years ago, 10 years ago, is devalued right now because everything is up, right? They can raise gas instantly. They can raise rent instantly. They can raise food instantly. So that same $100 isn't going to pay you out the same right now because gas is going to be more expensive. Food is going to be more expensive. All the things is going to be more expensive. So what you got to do is what you guys are doing right now. But you got to really buckle down because your guys' life can be so different next year. Many of you guys met me in IML. I had $8 in my bank account. $8. 2 years ago. 2 years ago. I had $8. And where I'm at right now is because of the hard work that I put in since then. I didn't want to be broke. I didn't want to not have any money. I had the mindset, but that's the thing. You do not have to have the money right now, guys, to have a vision. It takes no money in your bank account to have a vision. It takes everything that you have to have a vision and to work at it every single day. I want to see each and every one of you guys succeed in this, and all of you guys get better. And I want it to be easy for you to go to the retreats. I want it to be easy for you to go to the events. I want you to have assets working for you when you're asleep, money working for you when you're asleep. And then when you wake up, you just made more money. That's what I want for y'all, right? That's the kind of lifestyle I want. But you got to want for yourself. So when we get on here, you're not just listening to me talk and me get real hype over doing whatever on these trades and stuff, but you're getting on here and you're saying, okay, this is the information I need to take it to the next step. I don't want you guys paying $150 for no damn reason. What is that? What is that going to do? That's not going to do anything. I made tens of thousands of dollars this week. I'm good. I need to see you guys using this as an investment, right? Using this for yourself to take yourself to the next level. So yeah, that's all I got. Does anybody have any questions? I know, we covered a lot, and again, it's 9:30 right now, and we've been on this for 2.5 hours. I love it. I love every second of it. It's fun because I just get to see, you guys getting better. And then especially today, the questions that I ask, the things that I ask, it's like I'm asking them for a reason, because I kind of, know certain things. I kind of see certain things, and I'm like, okay, this. I'm gonna ask this person this. I'm gonna ask this person that. So yeah. But does anybody have anything before I hop off here? Because I know y'all probably hungry, sleepy, whatever. But it was a good session. We had a really good session. Put in a lot of time. Those of you guys who really actually apply what I'm doing, and that's what's going to help you. Those of you guys who go back and watch the webinars, that are kind of confused about things, that's what's going to help you. It's the things that you don't really want to do, guys, that you most likely need to do, that's going to make you better. Like, it's going to be you going back and watching the webinar like, damn, I got to watch this shit for 2.5 hours again. And I'm going to be sitting here and then not paying attention to your phone, not paying attention to the TV, not getting distracted by all those things, but going in and be like, okay, I got to go to work. I got to go put in the time. Just like your ass goes to work every day and you freely go there, but you get paid for it, you got to have the vision to know that I will be a millionaire one day in this. I will make no less than 6 figures a year in this. Maybe not today, maybe not tomorrow, maybe not next month, but soon enough, in the next 5 years, you can guarantee your ass that I'm going to be making 6+ figures a year from trading consistently, because you're being taught by someone who already does it. I know exactly how to do it. I know exactly what I'm doing. Y'all are gonna see the withdrawal that I'm about to do this week. It'll be cool. I'm just gonna post it in the chat. I'm not gonna post it all on social media, but just as inspiration, so you guys can see. So it's gonna be nice. Those things are cool. But this is just a part of the lifestyle that you get when you do things that other people aren't willing to do. Just plain and simple. So, guess nobody has no questions. I want to see you guys breaking out of old habits that no longer serve you, that don't matter anymore, because you choose to not make them matter. You're putting the money into yourself and investing into yourself. You're letting things go that don't matter, and you're putting in the time, guys. That's what it takes. Over these last 6 days or 85 days that I've been doing this, it's been a really, really fun time. I mean, and you think I said I was gonna lose people, and look what happened. The challenge, all that stuff happened with the challenge, and it was all a blessing. Everything was. I was so thankful for all the things that happened, because I knew whenever I made that, when I spoke to God and I said all these different things, I said, I said, God, please take the people out of my life that are no longer needed for me, that no longer serve me, and keep the people in my life that matter and that want to go to the next level and that need to be around me for this and that are going to help me. And look what happened. That's something I prayed about. I prayed about that. These are things I put down, I put out to the universe, and it comes right back to me. And those are the same things that you guys got to do, guys. Same things that you guys got to do. You got to get more serious. You got to want it more. So, again, I appreciate all you guys getting on. This is a beautiful life, man. Beautiful life. People are worrying and tripping out, and all these different things are going on. But at the end of the day, when your mind is sound and you're in flow, nothing can stop you. Nothing, no one but you can. You're the only one that can interrupt your own peace. That's it. Things are going to come up, and it's going to be a little interesting. Things are going to be like, it's a little this and that. But they're what needs to come up. When you pray about these things, when you put these things out there to the universe, it comes back. And it comes back in the lessons that you need to learn. And that's what I'm appreciative of. All the people that are here, the 20-some people that are in the academy, I'm totally fine with, totally happy with. And we all got a great relationship. Nobody feels done wrong. But some people did. But that's why they're gone. And you got to see all these things are a part of it. We all align. Everyone aligns. And these are things that I pray about. These are things that I put out in the universe. And it comes back every single time. And my trading has taken off. Lovely. Recovered from everything that happened. Went to a new level. Now we back to making hella money again. Let's get it. I love it. And now I'm just even more just excited to work with you. Not because of the money, but because I know I got the right people. And when I don't have the right people, they just leave. Plain and simple. It's that simple. So, y'all have a great night. Y'all have a blessed night. Hit me up if you need me. Your boy is GG's in the chat. I can't believe this computer died. That's wild. But it's all good. We leveled up. We got better. I'm going to catch you guys. Should be good for Sunday's call. If anything wild comes up, I'll let you know. Last Sunday I was fresh off of the Avatar course, and I was like, and then my freaking life was in danger last week. So it's all good though. But again, appreciate you guys as always. Glad that this was a great webinar for everyone. Y'all have a blessed one. Y'all have a great one. We're gonna have a great week next week, a great weekend. Just get better, guys. Level up. I'm gonna catch you guys later. Y'all have a blessed one. Have a great one. JDR is OUTTTTTTT.